Hi, everybody. It's FIBO Group, and you are watching to the Market Watch review. Yesterday's dismal U.S. economic data dealt a serious blow to anyone still believing that soft landing was possible. Stocks in the U.S. were affected by bad economic news. Europe's Stoxx 600 is down 1.2%, the largest drop since mid-December. This reverses the week's gains and stops the six-day advance. The possibility of a lower opening in the U.S. futures today is suggested by U.S. futures. Yesterday's demand worries had a negative impact on WTI price. API reported that U.S. stocks rose sharply, snapping the seven-day rally. Yesterday's February WTI peak was $82.40. Today, it fell to $78.15 before stabilizing. Asian Pacific market. Two developments are worth noting in Japan. First, December's trade deficit was lower than expected. Japan's trade balance usually improves after November. The second is that the weekly MOF figures reveal that Japanese investors were major sellers of foreign bonds last Wednesday. This was the fifth consecutive week of sales. The dollar traded in Asia and Europe below the level where it settled against the Japanese yen. Yesterday's low of JPY 127.55 has been maintained by the greenback. The December employment data for Australia was better than the headline loss in 14,600 jobs. After a November revision of 33,300, there was an increase in 17,600 full-time jobs. Part-time work was the only job loss. Yesterday, the Australian dollar fell and is continuing to fall today in a risk-off environment. Market of Europe. Two market metrics can be used to measure tension in Europe. The yield differential between Germany and Italy is the first. Low-level anxiety continues to be a problem. The Swiss franc euro crosses is another market metric. This is a sign of a cautious tone. The euro traded at its highest level against the Swiss franc since mid-2013, moving above the 200-day moving average. Although the euro reached a new marginal high yesterday, just shy of $1.0890, it fell to a low of 1.0765 4 days later. Today, the euro is steady and hovers around $1.0890. Sterling slid to the mid-December high yesterday, but it did not move. Today, it is below $1.2350 by less than half a cent. Market of America. All three indicators were weaker than anticipated: output, consumption, and prices. Although the survey data had warned of cracks, it seems like the economy has fallen off a cliff. The data likely helped economists to reduce fourth-quarter GDP projections. Next week will bring the first estimate. The Canadian dollar is suffering from the risk-off attitude. The greenback gained CAD 1.3500 today after an outside day of weakness against the Canadian dollar. Today's follow-through buying has pushed it up to 1.3520. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.